What is going on? It's Billy here from Storm Trades with another trade recap. Today we're going to run through a sweet little short continuation trade I took for a 2-hour win on Wednesday, August 6th during the New York AM trading session. We had time frame alignment. We had a clear bearish daily bias. Let's get right after it. All right, on the chart right now, this is the last 4 daily candles. We're looking at the daily chart. I'm going to mark up the daily chart the same way I do every single morning. Previous daily low, previous daily high. I'm going to run a fib from the previous daily candle. Okay, and I want to see currently, are we delivering from, or have we entered, or are we sweeping any sort of internal or external range liquidity? Well, you can sort of already see that shaded area right here means we are inside of a bearish daily fair value gap. Okay, price tends to want to work from internal range liquidity to external range liquidity. Okay, do we have any external range liquidity? We do. We have a swing low down here. Okay, a daily swing low is external range liquidity. A daily imbalance is internal range liquidity. Now, I want to also make note that the previous day, right? So the Tuesday, we had a strong bearish candle close. So if you're just using candle structure, we would expect, or excuse me, we would expect Wednesday to have a open high up into some internal range liquidity and then a close low. So this is our internal, this is our external, and this is very clear bearish daily bias. I'm expecting price to go lower. I'm now going to move on to the hourly time frame. I'm going to pull up the hourly chart. Now, as you will know, when I'm looking at the hourly chart, I'm trying to establish narrative, and I'm trying to do that primarily by finding the most recent change in the state of the delivery, and then marking off some potential draws on liquidity accordingly. First things first here is we want to make note of is on the hourly, when we came up and took the internal range liquidity on the daily, right? This week right here, we took some very good, what's considered very good draws on liquidity here at relative equal highs on the hourly time frame. It's a great liquidity pool, and we did that while also entering and now reacting out of a bearish hourly fair value gap. So already we have met our requirement for going down to the M5 time frame and trying to find trades that in this case are in line with our daily bias and in line with how we're reading the hourly chart. I will mark this off right here. This is our change in the state of delivery. However, because we've already entered the hourly bearish fair value gap and we've swept some hourly liquidity, I'm now ready to rock, and I'm looking for lower prices. Now I'm going to pull up the 1/3 ADR as I do all the time. And can we frame a trade? Can we frame a reversal around the 1/3 ADR here? Yeah, we absolutely can. Look how we have swept it, come back down into the range, and now I will be ultimately targeting, or at least using this sell side 1/3 ADR level as a kind of a barometer to see how much room I have to go. We have a lot of room, and down here is the swing low on the daily. Now, when I have a clear change in state delivery on the hourly, I will run a fib, okay, from the swing high to the swing low, see if that matches up with anything, right? So the first low-hanging fruit we have when the standard deviation levels is the -1 to -1.5. And if you look, that lines up nice with the 1/3 ADR. I like what I'm seeing. I want to get inside. I want to get on sides with some sort of a bearish move. Now I'm going to move down to the M5 time frame, and already my requirement for finding a reversal has already been met. Right, so we came up, we took liquidity here inside of some hourly and hourly POI. We have been displaced very strongly downward. Just want to make note that this is the change in the state of delivery, but we got no sort of opportunity to get on sides there. So whenever we miss the reversal, right, it's fine. We'll just try and catch the continuation. Let's mark off here that we have a very nice draw on liquidity in the form of the Asia low. We've already taken the London low. However, we get the 1/3 ADR down here, and don't forget that standard deviation level, the low-hanging fruit down here. I think we've got enough room to form and to catch some sort of a continuation move. So now we're just going to have to watch price, and hopefully we'll get some structure where we can find a way to get on sides with a move lower. So let's move price forward here. And this is what I do while I'm watching price. I'm looking for some structure to form, right? Let's see if we can get a swing low, a swing high, right? And then let's watch. So I'm going to move price forward here. And I'm looking for some sort of a sweep, right? So we have a sweep right here. Okay, there's a sweep. Now, whenever we have a sweep, we'll mark off the series, or if in this case, it's just a single, in this case so far, it's just a single up-close candle that took that liquidity. I would look to see if we can get a close below that order block to get on sides with some sort of a bearish move. Now, the very next candle provides that for us, right? That is a displacement candle, right? It's a V-shaped move that's indicating a bearish. I want to go down to sell side. In that case, I got involved right there at the candle close. Stop at the swing high. I will go ahead and simulate this right now. I'll put a sell order here, stop loss above that swing point, and take profit at the Asia low, which also happened to be a little over 2R trade. All right, so let's move price forward here, and not really much drawdown at all, and boom, and look at this, ladies and gentlemen. Once again, we have targeted the 1/3 ADR after forming a reversal from the opposite side. You'll probably see me talk about this all the time, right? For me, this is sort of like a little bit of a secret sauce. This 1/3 ADR level, no matter what pair I'm trading, gold, CL, NQ, 6E, I love to form reversals off of it. I love to use it as a draw on liquidity. And if at the very least, I'm using it to find out, do I have enough room for some sort of a play to form? Okay. Now, if we just play price a little further here, I believe at the 1/3 ADR, we had a reversal, but then we came down and started crashing. Anyway, this was a nice little trade. This is one of those situations where the hourly made sense. Inside of the daily bias framework, that we easily saw internal range liquidity get taken, and we had a clear draw on liquidity in the form of external range liquidity. We didn't catch the reversal, but we were able to watch structure form and then get on sides with a continuation to a very clear draw on liquidity. All right, if you guys got anything out of this at all, if you made it this far, like, subscribe, comment. I really appreciate anybody who watches these videos. You guys are awesome. Have a great day.